sole proprietorship, partnership, C corporation, S corporation, and limited liability company. These are the different business forms you need to consider. The sole proprietorship is good because it's simple. There can only be one owner, and you can operate under your own name or a trade name. Many people will start a business while they're still working for somebody else. That may affect your decision of a business form. If you don't need insurance and the complex tax forms, a sole proprietorship keeps it easy. The sole proprietorship has one major drawback. The owner is legally liable, and the owner's personal property can be attached to pay legal settlements. For that reason, many business owners avoid the sole proprietorship. Partnership is like a sole proprietorship with multiple owners. Once again, the major drawback is the danger of having your personal property taken due to a business problem. The corporation gives the owners personal protection from the company's actions. A corporation also allows you to take tax-free benefits, such as health insurance. The corporation, however, is taxed on profits before they are distributed to the owners. Then the profits are taxed again on the owner's personal income tax return. The corporation gives one other benefit, however. Many business customers prefer doing business with a corporation instead of a sole proprietor. Incorporating is a major commitment, which tells your customers that you are serious about being in business. Another deciding factor is what your business is actually going to do. In a high-risk industry, you should consider incorporating to protect yourself. If you're selling products at flea markets, maybe a sole proprietorship is good enough. Many business people choose a limited liability company because it saves them hassles of paperwork that the corporation brings, yet it still protects their personal assets from their business's liability. If you're not sure what business form is best for you, you should seek out the professional advice of an attorney and an accountant. And that's what the next portion of our program is about. Doing business brings with it a set of requirements, both legally and financially. Many businesses require licensing in your state, county, or municipality. There are several places you can go to find out these requirements. Ask other business owners in the town where you are going to set up your business. They already have experience with business regulations, and they may be able to give you some tips. Also, if they are potential customers, it's a great opportunity to meet them. Remember, however, it's your responsibility to legally establish your business. If another business owner gives you bad advice, that is not an excuse for failing to follow the law. The town clerk in your city will be able to tell you what licensing the town requires. The town clerk is familiar with requirements on a municipal level, but there are still state and federal regulations you need to follow. The county clerk's office is another source of legal information, and their familiarity will be with county regulations, not municipal, not state, and not federal. The best place to get legal advice, of course, is a lawyer. A business attorney will be up to date on all of the local, state, and federal requirements. When the attorney gives you advice, he or she is obligated to give you correct advice, or they are liable for their errors. It's up to the individual entrepreneur to decide where to get legal advice and what it's worth. Remember that a cheap mistake made today could be an expensive mistake to correct later. Legal advice is one place where you should not try to be a do-it-yourselfer. Accounting is a part of business that many entrepreneurs dislike. Instead of getting out and meeting people, selling products, making deals, and taking power lunches, accounting involves columns of numbers, mathematics, and organization. Accounting is also the area that determines whether you will be a failure or a success, whether your business is profitable or losing money, whether you will pay taxes or get a tax refund, and whether you will survive an audit when the IRS comes knocking on your door. The first accounting requirement is to set up a separate bank account for your business. It's important not to commingle your personal funds with your business funds. Next, you need a bookkeeping system. This accounting system makes it easy to track your expenditures and income. It allows you to take a financial snapshot of your company at any time, and it makes it easy to calculate your profit or loss at income tax time. There are two major kinds of accounting systems: the paper ledger and the computer. The paper ledger uses different columns to track different expense accounts. The expense accounts usually are set up according to the IRS Form Schedule C, which is used to calculate business income. A major downside of the written ledger is that there are lots of opportunities to make math errors. A much easier form of accounting system is to use a computer. How do you decide which is the best way to maintain your accounting records? For most businesses, the ease of using a computer-based system will far outweigh its cost. If you're not sure, talk to your accountant. Meet with several accountants before deciding who to use for your company. You want someone who's experienced with your type of business, someone you can talk to, and someone who shares your philosophy of how to run a business. What does philosophy have to do with it? Accounting is a science, but taxes are an art. Some accountants are aggressive deductors. They will try to deduct the air you breathe as a business expense. If you share that philosophy, that's fine, but remember, the accountant won't be sharing the prison cell with you. He just calculates. You get the responsibility. Other accountants are passive payers. They act more like government revenue agents than someone who's trying to help you save money. Once again, if that's the way you feel, then you and that accountant will work well together. Most business owners fall somewhere between those two extremes. You want an accountant who will save you money. You want someone to make suggestions that will make your business more efficient and profitable. And you want someone to keep you out of trouble. Your accountant will also help you when it's time to file your tax return. You can purchase a computer tax program, but we strongly recommend against that. Accountants have experience based on the other clients they work for and can provide many times their cost in value and savings. A good accountant will save you much more money than a computer program.